Defence shares have taken European stocks to record highs after leaders promised to rearm. European shares are hovering near record highs this Monday as defence stocks push them higher. Rheinmetall, BAE Systems and Leonardo have all seen jumps of over 10% after European leaders promised to spend more on defence, and the market expects further announcements in the next few days on how they plan to free up more cash to pay for it. Janet Moy is head of market analysis at RBC Brewin Dolphin. Janet, big jumps in these stocks today, so clearly the market thinks leaders will find that money.
In general, investors are just getting more confidence that there will be more spending over the longer term in terms of European defense spending. And I think, in an environment where there is so much uncertainty, it seems that the increase in defense spending is one area that has some more visibility. At least I think there's a lot of commitment, and it is in fact essential, right? I think Europe has admittedly been underspending on defense for a while, and finally it is likely to ramp it up. And I think particularly investors are confident that the new German government would be able to borrow more, relax its fiscal rules, and also there is a likelihood to establish a defense fund. I think if there is a lot of commitment, and I think if you look at the bond yields recently, there has been a bit of a pickup, but there isn't like a surge. I think markets are also likely to be in agreement that this is an area that is worth spending and focusing on. So I think the money will be financed by borrowing.
Can defence manufacturers, though, ramp up production at the pace that European countries are likely to want?
Yeah, exactly. I think that is a problem. Because at the end of the day, you need a lot more investment into the area, and you also need to establish the supply chain. You need to get the raw materials, and need to get the labor. So I think that is a problem with the market right now, because there is a lot of enthusiasm, obviously reflected in the share price of a lot of these defense and aerospace stocks. But I think a word of caution is that perhaps the pickup is just too rapid in a short space of time. And I think investors are just buy and think later. As I said, this is a theme that has a bit more visibility and confidence. And I think over the medium term, maybe investors would just have to think about the logistical side, the practicality of these. So I guess that could mean that the share price increase could flatten out a bit in the medium term, potentially.
We've had some more positive news, Janet, overnight from China, where manufacturing is at a 3-month high. Are we seeing some signs of recovery there? What's driving it?
Yes, I think there is a bit of improvement, recovery. In general, we have seen some less bad data coming out from China. I guess a lot of these pickup, say, manufacturing, industrial activity could be people rushing to export and manufacture ahead of the tariff that is going to take place. So I guess that could be a bit of front loading in terms of the data. And I think generally speaking, we shouldn't expect too robust activity on the manufacturing and export side going forward, given that the tariffs are implemented on China and there is going to be additional 10%. So I guess China would have to focus more domestically.
And you mentioned that extra 10% tariff on Chinese exports, which the Trump administration says will kick in tomorrow. How do you expect Beijing to react?
Well, to be honest, I think so far the retaliation by China is relatively measured, and it kind of shows that they don't really have much to retaliate on, purely because of the fact that China exports way more to the US than US export to China. So I think the pain point will be the usual ones, which is the agriculture sector, because that's a really political field, even though it's not like a huge percentage of US GDP, but this is kind of one of the pain points that China can push for, or potentially more restrictions on US companies operating in China. But then again, I think we can't expect the quantum or the range of policies to be a lot. I think there are real pain points, for example, like Apple and Tesla, which has great supply chains and consumer demand in China. But I think that would be really last type sort of resort, because it could be very detrimental to China as well.
That was Janet Moy of RBC Brewin Dolphin. Don't forget, you can watch more videos on Reuters.com.